Okay, we start the recording. Great. You mentioned something very interesting here, Wim. Everything is clear now, how to find, how to spot, where to enter, right? But few signals. That's correct, but the idea is not to trade more. The idea is to trade the good ones. Those who are very likely to pay. There is no guarantee for nothing, especially when it comes to financial market. But there is a guarantee that we are on our best starting point, right? And even if you have 2 or 3 entries which you can trade per week, that's, from my point of view, amazing. But today we will discuss a bit more about the advanced approach for crystal ball. I'll show you a few tips which you guys can apply. One of them is also the add-ons. Now, I don't do much of add-ons, to be honest, by myself, because I always love to manage one trade with maximum potential run. That's what I prefer. And I'll show you the options the crystal ball proved with all the system and all the tests, how the add-on should be applied, and also how to spot some of the decisions easier. Okay, this is the idea here. It's a bit more advanced. Those of you who were doing very well without the advanced, please keep do that. The advanced, as it sounds, that's what it presents. More advanced approach, which means more advanced analysis. Sometimes a more follow-up for a trade, because, well, after all, if we want to maximize the move that one pair can pay, we have to actually go and try to get it by a few portions. Okay, so all these things we will discuss about today. As always, if there are questions, please write it down. I will explain everything, of course. Let's begin, guys. So just quick reminder, first of all, by the way, we are here in a sell mode for cut franc today on the short term. We'll discuss about it. First of all, quick reminder, okay? We have 2 options to trade with the crystal ball generally, right? But before we even consider what to trade, we have 2 tools, actually 3 tools that help us to do that. One of them is the statistics, which I explained about the previous meeting. The other one is the idea of the crystal ball itself, to give us the percentage and the probability for specific day or 2 or 3 in a row to be bullish or bearish. Once we get this combination, it becomes very powerful. And then we have the final filter, which is called the trading channel, tunnel, whatever you want to name it. Someone sent me an email calling that the trading snake. And I love that, the trading snake. It's moving like a snake, right? I like that. You call it whatever you want, guys. You know I'm not a master of names. Even the crystal ball as it is, it's not my creation. I mean the creation, yeah, but the name is not mine. I have a creativity team here which helps me to find all these bombastic ideas here. So this trading tunnel, it helps us by 2 situations. One of them is to spot trend trading, which means as long as we are riding the trend after crossing, every time we got inside and every time we get corrections and we stay inside, we can look for the opportunities to go and continue with the trend, as long as the tunnel itself, of course, is still bullish. And the vice versa. Here was a ride down, some correction, and again cross down. As long as we ride it down, we just ride it. Okay, every pullback back to the channel or close to that, 1, 2, 3. Okay, every pullback closer to the channel, and we are after sales. This is the idea here. So we have right here live. Okay. That's option number 1, and option number 2 is when we go out of the tunnel. Now, the tunnel is an amazing thing, not just by following the trend, but also give us basically the understanding of what is the current normal price, normal middle price for the current instrument we are looking at. Okay, because if anything goes out of its normal zone, it tends to go back to the normal zone, like everything in life, right? Even we, as human beings, every time we are out of our comfortable zone, we are looking for all the ways possible just to return there back. We feel good there in our middle zone, right? On a comfortable zone. So does the market. So does every single pair. And every time we go out of the normal zone, it will try later on to go back inside. And that's the two options we can actually trade. And that's the two options we actually trade with that in general, or especially with crystal ball. That was my vision when I was creating the crystal ball, to cover these two situations. One, the trend following, which is very important, right? When the trend is so good, why not really go and follow it? And two, it's the reversals, when a specific cycle or trend is over and the new one is about to begin. Why not to be there, right? And the idea was to design that this way. That's what it's covering. Last week I gave you two tips which are very, very important when it comes to the trading tunnel. How we spot inside and how we spot outside. And for the outside, we discussed about two options. Every time we go outside, measure the moves, the big moves, the total break and the total low of the previous breakouts, right? On the past breakouts. Now, if you measure that, you would suddenly see some amazing pattern that these distances would be, after the breakout, would be pretty much equal. Okay? That's the big ones, for example, right? And that's the short ones, right? Short breakout. That's tiny breakout, right? What else we got here? On the past, we can go and look a bit more further, but you got the idea. And then we know, okay, this is every time we break, right? We are looking, okay, this is our potential stop number 1. This would be our potential stop number 2. And if the statistics, which we got the numbers here, potential days for tops and bottoms, and the probabilities for bullish bearish day, if they correspond and correlate with our distances we measure, with the levels we are expecting to trade, what do we know? That we have a potential monster opportunity, right? As I said on the previous week, and I just want to remind it once again here, it's very, very important to understand that there is no guarantee for trading or for successful call when it comes to financial market. I am sure you already know that, guys. But there is a guarantee that your chances are higher to end up as profitable if your starting point is good, right? And it's all about creating for us the best starting point, exactly like you are going for a run outside. If you have good shoes suitable for running and not mountain climbing, okay, and the weather is good, and you have with you water of bottle and I don't know what else, then your starting point is good and you slept well during the night, your starting point is perfect. You can get the maximum out of this workout, out of this run. Same here. If you want to get the maximum out of a potential trade, and I say potential because it's always a potential when we start. It becomes a winner or loser after we start. So if we want to finish with the potential trade, and we want to squeeze the maximum out of it if it gives, we have to be in the best starting point. So all these things you have to combine first of all, and then it will filter. It will filter many of the trades, but it will give you the best potential ones, right? It's all about that. I always tell that to everyone, guys. Just imagine what would you like to do? Trade 20 trades per week. Okay, 20 trades per week with, let's say, 1 to 1, or no, you know what, not 1 to 2 risk reward. Finish 7 winners and 14 losers. It will give you with break even, right? Or even 10 and 10, okay? 10 and 10. It will just give you a 10% grow up, right? Or you want to have only 2, 3, 4 positions, which would give you back 80% successful rate or 70% successful rate, and later on keep moving you to the same result or even better, right? So it's not about trading more, because trading more does not mean making more. No. Trading more probably means making less. It's about trading right. The ones that are really giving the best starting point. You agree with me here, guys? It's very, very important. It's very, very important. So that's the quick reminder of our first webinar, sorry, it's not a seminar, which we have been talking about. And today, as I said, I will want to go over some important advanced things, just give you the few tips how you squeeze the maximum out of a potential move. So when you asked, would you trade the 1 hour chart cat frank, you mean here shorts? Well, if you go to the 4 hour chart, do you have any resistance here? No. If you go to the 1 hour chart, do you have any resistance? Sell, we call it a sell action zone here, right? Because from resistance zone, we actually are looking for possible sells, right? So for us, sell action zone. Do you have anyone on the 1 hour chart? The answer is no. So no, there is nothing good to trade here. Plus, I'm not sure, even if so, I'm not sure if we get this trend line, we get a good risk reward by this. That's not a good risk reward here. Anyhow, nah, not really. But also, I myself am long, also from the bottom with crystal, and I also have the investment. By the way, this idea on the crystal I shared with you guys in the blog. It was live calling. Okay, now this one I will also discuss with you about today. I'll show this example. So let's start, guys. One of the advanced things that I love to do is to apply the idea of false breaks, because false breaks give us a great advantage and great probabilities to find this very first reversal zone. And if that place goes together with all the other things we have in crystal, mainly the buy-sell action zones, I know I have a monster in my hands which I want to trade. For example, let's take the same cat franc. I've been talking about that pair many times on the past in my forecasts and also in the blog with crystal ball. That was an amazing place looking for buys here. Okay. Now we are waiting for a buy signal moon, right? But we actually can also trade without it, because if we have, that's what we got here. The bottom was the 5th, right? We reached the zone we wanted on the 4th. 4 and 6 are powerful days to look for buys after down move. So I knew I'm coming here to an amazing place. Now, if you take a look, guys, on these distances, as I gave you a tip from the last time, from here to here, and from here to here, they are pretty much equal. They are pretty much equal, which is another amazing sign that the price went out of the normal zone. And it's reaching its critical area. So far, so good. Perfect. Now, even if I don't get here the numbers which I want to see for a bullish days on specific day I got the bottom, fine. As long as I have my potential reversals days, right? And I have this tunnel distance which I just showed you. All that means what? All that it means that, okay, we have what we were looking for. We have the best starting point. Besides that, we go to the 4-hour chart. We can see that we are in an amazing buy action zone. And we go to the 1-hour chart and we got the same zone exactly there when it was actually there. Now it's here, of course, but it's updated, but it was right here. Everything was on the same zone. Maybe not the same level, but same zone. And now here comes the thing. There are two things that I love to do for a bit more advanced. And I am checking here for false breaks. There are two options that false break could look like. False break can look like horizontal. Okay? And false break might be looking as trend line, but not classical trend line. I call it the alternative trend line. Why? Because the classical one, what do? You connect the tops, right? That's the classical trend line. The classical ones we use for entries. But to spot our reversal zone, we actually do the alternative trend lines. So if we are on a down move, we connect the lows. If we are on an up move, we connect highs. Okay, that's the alternative trend line. And once we get like a break above this trend line and retrace inside, that's an amazing call that we are ready to go. And you could, this is why I showed this is a potential, the best potential place, because this is maybe the best starting point. Yeah, of course, if we get a trend line after that, trend line breakout after that, this is an amazing confirmation, we can go and trade. But for aggressive approach, we can try and squeeze already from here, from these false breaks, once they happen. If all the rest, of course, matches and coming all together. And why? We can start on aggressive approach with much smaller risk, and then we can apply the idea of add-ons. And today I want to show you this kind of add-ons. Okay? So that's the false break. Then we have two options for them. And if we take a look on the cat front, what do we discover? That we have had this false break. Now, one more important thing to say here is actually the distances have to be equal from here to here to here. All the lows visually, they have to be pretty much equal. pretty much means like that. It doesn't have to be right on the pip or right on the candle, but it means it cannot be something like that. That's irrelevant false break. The moves have to stay connected. And this, that when the distances are close, I know it belongs to the same move, to the same cycle. And that's where I will want to go and look for possible trade. This is where I can start my journey. This is when I can start to add, and I will show more where and how we can actually look on these add-ons. Okay, so once we spot false breaks, this is what I called the alternative trendline false break. And very important to say here is this alternative trendline false break could happen on spot number 3 or spot number 4. It cannot be on the 5th, 6th, 7th or whatever it is. No. 3rd is the best. The best. 4th is good enough as long as all the distances are equal visually. Okay? Very, very important to say. And this gives us a great starting point. Aggressive, of course, because there was no step trading, there was no trend line breakout yet. This is aggressive. We rely here on statistical numbers and all the buy action zones and the fact of false break. By the way, false break provides us what, guys? False break provides us the understanding of what? The psychology behind it. Okay, if we listen to the market, what it tells us? It tells us what? That the bears were trying to break down this trend line and failed. They actually failed. And the retrace up covered by the bulls right after that gives us an amazing confirmation that bulls are taking the control. And this is why it's called false break. The bears were trying to break down, but they failed. This breakout was false, fake. Okay. So this is the first thing we can use, the false breaks, to give us the amazing starting point. The second thing is add-ons. How do we actually add? And do we actually add? Because one of the options is to enter the trade for our 1 hour chart. Once you spot that, that was the case of for last trend line. Not good, because the distances are not equal. For equal distances we have this trend line, right? And the question is, how far can we actually go with that? Now, the idea here is very very clear. We can trade the classical 1 to 2 risk reward, right? Which is pure statistical trading. Wonderful approach, of course. But we can also try to squeeze the maximum out of it. And the maximum is until we get opposite signs, which we got, by the way, only here. When we reached this top yesterday, today we start seeing a signal, 10. It was yesterday, 10 of the top, and we are inside the channel. You see this channel, guys? We back from the bottom to the channel. This is a great potential for a cash out. Okay, so yeah, the distance was not too far, but it was still there for the sell action zone, right? We still might, after this move down, go and continue towards, okay? But we reached inside the tunnel. We got the statistics against us. Why not to make money? There will be always an opportunity to rejoin. Okay, and even if not, awesome, we already made money. Why would we care about it? And once we know the potential tops, I'll show you some tricks for that, by the way. let's assume, let's take the pair, for example, Swiss yen. Okay, we are currently moving down. We want for potential buys. That could happen according to the statistics 12, 13, 16. That's a monster period, meaning this zone most likely going to create us a buy opportunities. So what we do here, we insert some kind of, I don't know, arrow, okay, on the dates we want to see. You can insert some kind of shape on these days, and you cover yourself this period. So you prepare in advance your levels, okay, you see? Then you move it accordingly to the supports, for example, and buy action zones for us, right? 4 hour, 1 hour, okay? One of them is here, one of them is a bit higher, and this is where we start looking for possible buys for further continuation, right? Will we get a sign? But we don't buy right away, but we know this is the best zone for us. And then even if we try the 1 hour, or even 15 minutes if you want, if you reach this level, what we are looking for, we can be looking for trendline breakout and entries, or we can start by doing false breaks. For example, we got 1, 2, 3, and we got here some false break. This is an opportunity to look for possible entry. Aggressive start, right? But a wonderful confirmation combination of everything. Dates, tunnel, buy action zones, right? It makes sense, guys? We create ourselves the action zone. So what I suggest here a little tip. Just make yourself these little boxes on the pairs you trade. Euro dollar, for example. Now we don't have any specific dates, right? But 16 could be amazing, 15 and 16. So if we dance around for a few more days, we are staying inside the tunnel, boom! From here we might be looking for some massive buys. Right? Make sense? Okay? Then this is what that's what we combine. That's what we actually combine here. And that's how we find our opportunities. By the way, the euro dollar had a 9 as the bottom, and that happened actually 2 days ago exactly. And you can see it's dancing since then. You see? Right here, 9. It's dancing since then. And what it's doing right now live, guys, just to show you this opportunity. What it's doing right now live here. What is that? A false break that we have been talking about, right? You see that? So here how everything starts to come to place when we combine it all together, even without waiting for specific calls. We create the calls for us. Now the question is, how do we do add-ons once we run with the trend? Take any pair that gave us the moves last time. If it's the cat franc, for example, we started to talk about. What we do is, once we know our potential top, right? We can start and put the opportunities together. And once we are in, we can always look to add-on. How? There are only 2 ways to do that. Let's say we are running up. We got 2 waves correction and their breakout. 2 waves correction and their breakout. That's our add-on. And that could be, let's say we entered on the 1 hour chart. These add-ons could be also on the 1 hour chart or one time frame lower, which would be the 15 minutes. Not less, not more. Not lower, not higher. 1 hour or 15 minutes. One same time frame or one time frame lower would give us these solutions. And every time we get that, we can go and make the entries. We can have few add-ons. We can have none. but we can have few add-ons in the same ride. So while your original entry was, let's say, was here somewhere, you enter this breakout. While your original entry gives you 1 to 2 reward here, on the squeeze up, you can have 1 or 2 or 3 or 4 more riding opportunity. 2 waves down, and you are good to trade the breakouts. Option number 1. Option number, which, you know what? I just want to finish with that. And the question is, how do we know if our levels are legal? Okay, so we have 2 options for that. Actually, 3. Let's assume this is our move, okay, double move correction. How do we know if it's legal? We measure Fibonacci expansion. Okay, you got it right here. Fibonacci expansion lines. If you don't have that, go to this dotted line, right click, customize, and inside the customization you would find the Fibonacci expansion, which is here. What you do after that is insert. You move it from here to here, and then you close. Once you did that, you have this tool right here. How to measure Fibonacci extension? You click on that, you click on the starting point, you drop down to the ending point of the first move, and this small move is to the end of the correction. Once you did that, you get the levels. You get 3 important levels: 61.8, 100, or 161.8. There is one condition for the double wave correction which you can trade after that, and that it has to stop on any of these 3 levels. If it did, it could cross a bit of it, it could even miss few pips by reaching that, but it has to be there on this zone. If it did, then your breakout is legal and you can go and trade its continuation. Okay? That's the idea. Now, we saw the entry here. It was a 1 hour chart false break or 4 hour chart false break here, whatever we need. No divergence required, Wim, for one reason. You are joining the momentum. Right? You are joining the current one, the current move you are trading anyway. There's the same 1 to 2 or more risk reward, right? No divergence required. Just the breakout. 2 pullback, breakout. 2 pullback, breakout. This is what it does. Okay, and what we do is we are looking on the, if we're entering 4 hour, 1 hour chart. If it's 1 hour chart, we can go and trade the 15 minutes, and we try to squeeze the maximum of it. Every 2 small waves down. 1, 2, 1, 2, 1. No, my measurement is wrong here, sorry. This one is the correct. 1, 2. Okay, in that case here we got the range. This is the second thing I'm going to discuss about. Here we got one more. 1, 2. Each of them gives us this chance to squeeze the maximum of this move. It might end up as losing one, of course, but if one lost, one added the opportunity to 1 to 2 risk reward, we always in the profitable round, in the profitable numbers. Okay, for add-ons. Now there is one thing we have to do, and that's Fibonacci extension. Remember? So what we do measure every single move of this, like here. We measure this, boom, blocked on 61.8. We measure this, boom, blocked on 100. We measure this, blocked on 100. We measure this, and we get 161.8. We block there. That's the most important thing. I don't ask anything else. Just make sure you have valid correction. That's not too much to do. You are riding your original setting trade. you can squeeze the maximum of it. But not everything is beautiful as it looks, right? It will require more time of you. It will require more time of you. It will require a bit more reads because you do add-ons, right? But it does give the chance to enjoy much bigger return on one single trade. And here is another disadvantage. If your original risk, well, let's say you are risking only 20 pips and you are expecting to make 40 pips return, there is no chance you are going to squeeze the maximum of it because, well, the moves are small. But if your risk is, let's say, 70 pips and your target 140 pips, still 1 to 2. But within this 140 pips up, there will be all these chances. Right? And the biggest advantage of it, Snorri, I think you summarized it the best way. I didn't think about it this way, but you just said it very correct. Snorri says, this can also be the way to join the move if you missed the original start of the move. Correct. Correct. As long as we don't have opposite signs against us, which are the days, which are the sell action zones, which are the tunnels, which is the tunnel. We have only one tunnel, right? That's it. As long as we don't have these opposite signs against us, we are good to go. We are with the momentum. If we have opposite signs, we don't do that. That's really all, guys. That's really all. Really, that's all. It looks like, wow, so many things to do. No. No. It looks like if that's what you tell yourself, wow, there's so many things to follow. No. They are the same things to follow. Not so many. It looks like, and it is the beginning. Once you actually understand what you are looking at, there is no left or right. There is only straight. You need to get that in order to consider the trade. That's all. That's all. Okay? So that's the add-on opportunity after two waves retraces. And then the final one we have, as we saw on this move right here, is when we get stuck inside a range. So range could be ugly. Okay? Range could be ugly. Especially in the 15 minutes. Right? But when you have 6 spots at least, 1, 2, 3, 4, 5, 6 spots at least inside the range, when you get a breakout, it's considered to be exactly like the breakout of the double move. It's good enough. That's what it is. Okay? Nothing more to say about ranges. 6 spots inside the range. Range could be horizontal, it could be like triangle, it could be whatever you want and can measure. It could be flat, it could be like that, it could be like that. Whatever it is, we don't care. Range is a range. That's the second option for add-ons, because sometimes it stops just for good. Just stops. No two waves retraces. If it doesn't happen, just don't do that. Skip that. Okay? Let me check my list. So I just want to cover all the things I wanted. So we discussed about the add-ons. We discussed about the exit points. When we get the exit points, like with this cut franc. We discussed about the boxes where we combine the boxes for us, right? In advance, box of days and action zones, and false breaks, of course, and oh yeah, one more thing, guys. I don't have it on the list, that's why I missed it. Sometimes what we get is called, well, sometimes what happens on the market, it's very rare, but what could happen is one big candle and then 3 inner candles inside it. If you can see the situation, okay, let's say that was a green candle here, and then 3 dropping candles down. When you have that, that's a very, very, very powerful pattern, considered to be like a range, yeah? But this is a very powerful pattern with the breakout out of this zone. It's very good continuation call. It's rare, it is rare, but it happens, and you will see that, because when the momentum is going, you would see that sometimes creating 3 inner candles inside and then boom, breaking that. Okay, so once you see something like that, you know you can go and it is kind of the force pattern. Exactly, it's kind of the force pattern. It's something like that. This one, you see this, guys? Let me just enlarge it a bit. Where it disappeared? Where it disappeared from me? Here, you see this? One big candle, 3 inner guys inside. These ones. Okay? It's kind of the inner, yeah, but that's what I'm talking about. One big candle, boom, and this is a great zone for entries. This candle is kind of short-term protection zone. Okay, that's a great place to know. Okay, if it's about to hold, great, we have all the reasons for continuation. If not, not. Okay, so basically what we are looking to do, as long as again we don't have nothing against us, this is what we are looking to trade. Okay, that's the breakout, and our protection will be below the candle. Of course, if it still gives you the good risk reward, and which is at least 1 to 2 to the level you want to go. Yeah, it's always at least 1 to 2 to the level you want to go. That's how we measure if it's good risk reward or not. Okay, it's rare, but it happens. And if it does, I just want you to guys to know how to deal with that. That's all. Okay, don't rely only on that. But if it happens, I want you to remember, Vlad mentioned that. That's how it looks. That's what we do with that. Okay? That's all, guys. Now, you are full with all the to-do list, the right to-do list with the crystal ball. If you have any questions, let's go over that. Of course, you can always ask me after by Skype, by email. Share your impressions, guys. Share your trades, share your performance. Just last week I got, last week or this week? I think it was last week. 25% growth within 1 month. Yeah, big risks. Yeah, I really agree. This guy was taking 2.5% risk per trade. Okay, 2.5%. But the performance is amazing. Not so many trades per month, only like, I think it was 14, 15 trades per month. That's all. Okay, so keep sharing me, guys. You share me, you give me the motivation to continue and create things and improve things. Really, I'm not hiding nothing. That's what it is. It's really motivating me to know when you do and how you do, and that you do well. Well, you asked about, do I include cycles to make any decisions? For me, cycles is everything. Everything was and remain about the cycles. But here comes the but. What I gave you here in Crystal Ball is much simpler variation for cycles. Why? Because if you do scan what I showed before, like the distances out of it, right? Like the distances, it will automatically scan this cycle for you. If you would measure this, you would figure out you are here on some on some cycle zone. If you would measure this, you would understand you are on some cycle zone. These distances is much easier variation to look at all that and get decisions in the go to trade. And the reason the crystal ball was created is to keep simplicity. Okay? Wait for the right zones, and there are only few options to apply. And if you respect that, and you respect the risk reward of it, you will be doing good. If you don't respect that, I can't be responsible for that. Okay? Because I designed the crystal with one specific idea, and that's what I showed you here, guys, on these two meetings. I'm very sorry I couldn't meet the previous week, some personal things, but here we are. We finished now, guys. You are all set to work with crystal ball. If you will have any questions, guys, do not hesitate. Okay, you know you can reach me anywhere. You have my contact details. You have the support guys details, of course. And that's all. I hope you enjoyed. As always, I did. And I hope that was mainly beneficial for you guys and helpful. And I hope you take these tips and tools I gave you here, and it helps to your trading. That's all I'm trying to do here. That's all. Thank you very much for your time. And I wish you a wonderful weekend to come. Weekend coming soon. Enjoy your time, guys. And again, thank you for your time being here. Bye for now.